Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite, we have Kinahan. He's a Chief Market Strategist over at TD Ameritrade, and we are here with October's top buys and sells with their 11 million retail clients. JJ, as always, it's great to see you
Always
in whatever part of the world that we're in.
Yes, always great to see you.
But let's talk about the IMX. This is a measure of activity with the 11 million TD Ameritrade clients. It sounds crazy when you say that out loud, 11 million all the time. IMX, despite a really volatile October, it was just downtick slightly. I was surprised to see that.
It was only down 2%. I'll be honest, I was a little surprised with that also, Jill, but I think it really shows that people may realize that this isn't crazy. This is a return to more normal volatility. Volatility tends to be mean reverting, and so, you know, we're trading about a 20 as you and I speak right now, which is right near historical levels overall. So it was a little bit of a crazy month, as you said, and also with some of the sell-offs, the stocks that people trust, they were buyers of. You know, you saw Apple, you saw Amazon, you saw Microsoft, and people use those sell-offs as buying opportunities long-term. They're still the stocks that they want to own going forward.
Well, if you liked them 10% higher, you certainly have to like them 10% lower if the fundamentals have not changed at all. But when I look at the IMX number and it's only down 2%, it suggests to me that October wasn't a panicky type of sell-off.
Absolutely, and if you watch the days, there was only a half an hour of one day that I would say was a panic at all. Other than that, this has been the most orderly sell-off. So what does that tell you? That this is just a repricing of assets. There's a repricing of expectations. You see it in what the CEOs are talking about. The CEOs are being very, I won't say guarded, but cautious in the guidance they're given, and I think that that truly is why people are a little bit more cautious on repricing things. We'll see if, you know, we have the G20 at the end of this month. We'll see if things with tariffs work out, and if they do, that's an opportunity for the market to go much higher, and I think that's how people are looking at it also, that that story hasn't fully played out, and if it does, things should be priced here, but if it plays out well, then things should be priced higher.
Well, I mean, we're used to over the past 10 years with assets just going from the bottom left of the chart to the top right, and that's not the way markets function. They're supposed to go up and down, so you get averages each year, and great for traders. They wanted volatility, they got it back. Now, where did you see them taking profits and advantage of that volatility in October?
Well, you saw things like Qualcomm and AMD, which are two stocks that our clients have been in for quite a while. You know, the social media stocks, I talked about FANG stocks a little bit, but I'm going to talk about social media being a little different than FANG. And, you know, Facebook and Twitter were two stocks that our clients have owned quite a bit and just wanted to ease up on there. And I think that's one area where people are still trying to figure out the pricing. Starbucks, which our clients were buyers of earlier in the summer, it's up about 20% since June. Clients took some profits there. And then the one that surprised me is ExxonMobil. The reason it surprised me, that stock and AT&T not being on the report because it has been many months as people bought an Exxon, because Exxon people use as a yield play, which they do for AT&T also, but they also use it for an energy play. And I think some of the headwinds that the energy market has faced really, you know, Exxon had a little bit of a pop and people were just like, you know what, had enough time to move on somewhere else.
All right, well, let's get the remainder of Q4 outlook from you, what you're looking at going into 2019, because we still have a lot of events starting with midterms tomorrow.
Yes.
So that should be
midterms, G20, and then, you know, and hopefully some sort of good result of tariffs. I think that's weighing much heavier on the market than the midterms. And you saw whenever we had news over the last few weeks, when the volatility really got big intraday, it was when there was some tariff news, not election news. So I think that that's the thing that people are waiting for primarily. But then even when that's done, Jill, I think sometimes people forget, you know, we still have Brexit on the horizon, and that has a lot of implications. What could happen there? We do have the EU itself with some of the countries having budget issues, and more importantly, well, I won't say more importantly, but as importantly for China, outside tariffs, they've shown a lot of slowdown over the last 6 months. So if China continues to slow down, that's going to have some reciprocal sort of effects on the U.S. And the last thing, you know, with interest rate hikes that we're all expecting in December, the dollar's been very strong, and it's one of the reasons I think the multinationals have been very cautious on their guidance also.
All right. Well, thank you for joining me as always.
Always a pleasure, Jill.
And thank you. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.